Okay. Welcome everybody. So welcome to today's session. We've got business financial essentials. Firstly, I'd like to take a moment to acknowledge the traditional owners of the land on which we're meeting today. I pay my respects to elders past, present and emerging. My name's Caitlin and I'm from the Queensland Government Mentoring for Growth program. So this program offers eligible businesses free access to business mentors who provide food for thought, insights and suggestions around the challenges and opportunities a business may be facing. So I'm really excited to facilitate today's session. Good financial management and well-established processes enhances your chances of success as a business, but also sort of sets the foundations for future growth. So I'm really excited to have our four wonderful mentors here today who are going to take us through the webinar. In a moment, I'll pass you over to them. So we've got Kanyo, who will be chatting about startup costs and budgets. We'll then have Natalie, who'll be providing some insights around financial reporting. We'll then have Ian, who will give us some insights around cash flow. And then we'll have Tracy wrapping us up at the end with tax obligations and hints and tips around them. We'll have an opportunity at the end of the session to answer your questions. So as your question comes up, please put it up in the Q&A function and we'll work through them shortly. I think that's everything. I'm really, as I said, excited for this session today, and I'll pass it now over to the wonderful Kanyo. Thanks, Kanyo.
Good morning, all, and welcome to this webinar. And thank you for the Queensland Government for facilitating this. It's a great agenda item for all of us. And being on this webinar, I just want to congratulate you guys for all looking at going into business. If that's what you guys want to do, it's an amazing thing. And hopefully today we can help you with just a couple of those small questions about startups. So. For myself, I would say that I always say to my my team that preparation is key and knowledge is power. So preparation is very important. Now, you're never going to be fully ready 100% in business. There's always going to be nuances and economic change and so forth. So we can only do and work on what we have at the moment. So the other thing to think about, and Ian will touch on this later on, is that the most common reasons why businesses do fail, and it's the only time I'm going to say something negative, is that we don't have cash to pay our expenses. So we'll have Ian in there talking about a bit about cash flow, but that's important to understand. So it's cash is key. So on average, I've done a bit of research, and we are small business, so we're not talking about opening up a new mine site or something like that. So we're talking about just some small business ideas. And typically, Aussies can spend around about $3,000 to $5,000 on a startup of a new business, depending on what they're doing. And I've had businesses spend, small businesses up to $10,000. So that's a sort of idea just to think about. And when I say 3,000 to 5,000, that's probably things that you probably haven't thought about. And that's what we're going to sort of open up that idea now with regarding what are those things. So I sort of break it into the basics, the assets, and then also the commercial stuff. So the basics are, your ABN, which again, it might cost you a quick chat with an accountant, but an ABN is free if you do it yourself. Any structure, an accountant's going to talk to you about structure, and that means am I setting up a company, sole trader, trust, or so forth. So there's going to be costs in setting up that. Setting up your GST, depending on what industry you're in, there could be some permits that you need to do, or some training that you might need to do. For example, just recently set up a beauty salon, and the owner of that business had to spend about $3,000 or $4,000 on a training session on how to do what she's got to do. So there's those type of things. Website and your socials. So we need to look at how much a website's going to cost. Something, can we do it ourselves? And it's about a time thing as well. Like I've always been a proponent on, how long will this take me to do myself, and can I get other people to do it and pay some money and save some time so I can dedicate that to my core business. So they're the sort of basic stuff to think about. Then you look at assets. Am I going to be a product-based business, or am I going to be a service-based business? So if you're going to be in a product-based business, then we've got to factor in the cost of stock. And unfortunately, a lot of these suppliers, when we're starting out, they'll make us probably buy a fair bit of it. And then you've got to think about, how's it going to go obsolete? What are the terms? Will they give me credit? Can you imagine a supplier saying, hey, I'm just starting up, I'd like $10,000 worth of stock? They're not necessarily going to say, no worries, pay me back when you got the money. So we're going to have that money side as well. So make sure that we have that stock. If it's a service-based business, what are the certain things we need? Do we need some tools? Do we need a vehicle? So those type of things. Now, don't be too scared about having to go and fork out a lot of money on tools and vehicle up front. So there's a lot of people out there who understand that and will give us financing terms. So it's amazing, if you get some good people in business and bankers and so forth, you could pick up your I guess what you need, not your wants, and put a package together and be able to pay that off on a weekly or monthly basis. So that's important as well. Then things like, once you've looked at your assets that you need, you look at the commercial space type of things. So do I need to have an office space? Do I need a shop front? And unfortunately, things that you might know, and just like when you go and rent your own property, they'll ask you for a deposit. They might even ask you to pay some months up front to make sure that they're not going to lose out. There might be a fit out that you might need to do as well. Now, again, don't be too worried about that too. The fit out can be usually financed as well. So that's a matter, going back with what Ian, I'm sure will talk about making sure that you can find the cash flow for that. So do we have that? There might be some legal fees that you might need to pay for a lease, that type of thing. So once you've got those basic information, so go through things like accounting fees, go through your rent, all the easy things, and then you add it all up. Then you sort of know what it's going to cost you to run your business on that basis. And you always throw in a few, just like in life, you throw in some miscellaneous expenses there as well. That gives you the basis. And I know part of my topic is budgeting. You can't do a budget without knowing what your expenses are. And they're I guess the easy stuff, the stuff that you sort of know it's going to cost you. Insurances are very important. So you need to speak to an insurance broker. But then it's about the money coming in. So then obviously, the money coming in, the money going out, that, well, at least I need to make enough money coming in to pay for my expenses. So that gives you an idea of, okay, if I need to make so much money, what's my average, my sale price of my good? And you might divide that by how many sales you might make a day. Then you sort of know how many times do I need to replicate my sales to break even and to pay that. Now, you're probably going from working in a job as an employment to going on a business. So just covering expenses isn't going to put food on the table. Then you've got to look at, okay, can I replace my wage that I was on before? And then you've got the nuisances that I'm sure that we're going to be talking with Tracy about, things like your taxes. So you've got to add up that and go, oh, well, the government will take a little bit of that slice as well. So we've got to add that back. So the first thing I'll just in summary, that we need to look at, around about $3,000 to $5,000 at least for setup costs for any business. And then start looking at adding up all your expenses together, getting to a point where you know what you should be paying in an annual basis. Then start looking at your products or services that you'll be selling, and to work out what you need to be able to sell. And that starts your little mini budget up. And another little tip would be to have multiple bank accounts. If the money's not in the bank account, it stops you spending money. So you will probably be very successful at the start. I wish you all the best, but just be careful. Get the money out of the account sometimes. Take it, put it into a GST account or a tax account or something else, and only have the money there that you probably need for the next month or two to make sure your expenses are paid. That way, the money you're sitting in that spare account can be for increasing your business. It can be there for tax. It can also be for the rainy day. And trust me that those days do often come across. But hopefully that sort of little small summary is giving you a little bit of insight into how to start a business. And obviously I'll be available later on for question and answers. So over to you.
Everyone, it's so great to have you all here on today's webinar talking about all things finance. I'm going to go through a few things in regards to financial reports and what do they look like and what's included in them. So Basically taking everything that was just spoken to about Kanye and implementing that into our financial reports to give us what we call a profit and loss and a balance sheet. So they're the two basic financial reports to start with. And what's included in a profit and loss? So a profit and loss is a summary of your business income and your expenses, and it usually reports a couple of extra things to us. So that would include gross profit, operating expenses, and also your net profit. And those things can be used by your accountant and yourself to make business decisions. So to explain a little bit further what gross profit is, it's calculated with your total sales revenue, your total income, less your cost of sales. Mostly cost of sales is in line with product-based business is most used, but you can also have it when you've got a service-based business that has a lot of materials and things like that going on. So if I give you a bit of an example, say you've got a custom printed t-shirt business, some of those costs that would be reported as cost of sales include the cost of the actual t-shirt, the cost of the freight to get it to the screen printer, and then also the cost to actually print the shirt. So that just kind of give you a bit of a summary. Your net profit is then calculated using that gross profit less any other operating expenses. So operating expenses are all the things that were just touched on. It came from a startup perspective, but those expenses you need to run your business every day. So they're what we call operating expenses. For the balance sheet, it's like the second part of what comes with your financial report. This is made up of a summary of your cash, your assets and your liabilities, leaving a balance known as what we call owner's equity. So very accounting heavy topic, but it's good to know just the basics here. So an asset is defined at something that the business owns, including the cash. So that's all your bank accounts, like suggested before. When you break them down, you'd have multiple business bank accounts. It's also the equipment used to run in the business. So anything that's related to the business that the business owns. A liability is defined as something that the business owes money for or owes, so loans for equipment or ATO liabilities. That's also something very important to keep in contact with and understand well at what point we've got total cash and we've actually got a bunch of these liabilities that may not be due today or tomorrow. They'll be due in a few months, but we need to know what they are. And then the balance of those two is your owner's equity, which is the net worth of the business. So essentially, the key thing here is to be able to easily and accurately create these financial reports. And the most important thing is getting foundational practices in your business to be able to do this quite easily. So first and foremost is to have a separate business bank account for all things business. All your incomings and all your outgoings, everything. So it's separate from your personal day-to-day living expenses. This just makes it so much easier to track and to be able to give to your accountant or to put into your bookkeeping system, and also create those reports that I just broke down for you. I also suggest that with this day and age, like so many services that can be paid online really easily. So setting up a debit Visa card attached to your business account so that you can track all your accounts and your expenses really easily just in that one business account. Like even if you're using your car for work for the business and you want to go to the fuel station, having that debit Visa means you can pay and use it, take a photo of your receipt and off you go. So it makes it a lot easier. And then I would suggest as soon as possible to set up a bookkeeping system. That can be done very simply in the instance of a very startup business. You can use an Excel spreadsheet. It's simple just to track everything you've got, and it makes it so that you can see everything in total income and total expenses. So we know if we're making a profit and also if we can change things. So being able to implement price increases or selling more products and all of these things, talk to your suppliers, things like that. It's really good to have this tracking. It is best if you can have accounting software because that will make it even more simple and a lot easier to run your profit and loss and balance sheet. It would also keep it a lot easier for your accountant to prepare business activity statements and any tax obligations. So this is where all the things come together that we're talking about. And from a small business owner's perspective, it's hard to know early on the ups, the downs, and all of these things to what creates a profit and what creates a balance sheet. So if you've got this simple record keeping, it will really help you from the get-go. It also will help you stick to your budget and also track to see where you can tweak things or how much it's actually costing you to run your business. So the sooner you do it, the better, I say. Also, to help keep on top of all your financial reporting and things, I suggest it's very important to set aside some time each week. Stay on top of everything. Keep yourself, everything in a neat pile, and then get to it and do an hour of power, I call it. Follow yourself a simple system, and so that it's not too onerous. You don't want this stuff to be difficult for you. So it's really important to, as well as part of that hour, is make sure you're invoicing your customers and making sure everything's spot on so you can get that cash coming in as soon as possible. So that's really important. But once you have all of this nailed and you really understand your financials, your profit and loss and your balance sheet, don't forget you can also create additional management reports to monitor performance and make business decisions towards your goals and objectives. But first, if you can nail this and get it right, then it'll make everything so much easier for the rest of your business. And so that's me all wrapped up. I'll pass back to you, Caitlin.
Thanks, Nat. Wonderful insight there. Now we've got the lovely Ian giving us insights around cash flow. Thanks, Ian.
It's like Carney, I've got a little bit of a mantra that I like to spread to clients, what I've learned over 25 years or so of chartered accounting. You focus on turnover for vanity. You focus on profit for sanity, but cash is your reality. And so my little topic is about cash. And I guess, we see a lot of errors made by business owners when they talk about the size of their business and worrying about how big it is. And then you really do need to be able to sleep at night knowing that your business is making a profit. It doesn't really matter how much you turn over. Ultimately, you've got to make sure that you control your expenses and make enough money to deliver a profit. But ultimately, you can't survive a day without cash. And so some of the tips that have already been suggested are really good ones there. I mean, like Nat was talking about, it's the disciplines, the hour of power. I think the really good discipline that I'd suggest to any business owner, regardless of whether they're a huge business or a small startup, is make sure you keep a bank account separate for essentially your GST obligations. I've been a tax agent for most of my life. And one of the things that we always suggest is, look, it's not your money. GST that you collect on behalf of your customers is not really your money. The ATO are making you a tax collector. So the best way that you can sort of have as a discipline to try to make sure that you've got enough cash to meet your obligations when the ATO ask you to pay the GST on behalf of your clients is to have it in a separate account. And in days sort of recently where we've had low inflation and stuff, people have been hesitant about putting money aside in a bank account because there's not enough interest or those sorts of types of things. Or people feel they can get a better return having their cash elsewhere. But I would really highly recommend any business startup or owner really develop the discipline of setting up a separate bank account for your GST that you collect. And that is a really good thing because then you always know you've got the money set aside to meet your BAS obligations as they fall due. Now, you can take that to the next step. And the real power users, I guess, of using these separate accounts, they can use that account for, say, if you're on a salary, you can use it for your POG withholding, which is the requirement of taking out a bit of your money for tax out of the salaries. And again, it's just a nice way to make sure you can sleep at night with knowing that you've got your tax obligations covered on that part. You can also put super in there if you're indeed paying yourself a salary on those sorts of types of things. And that's one of the key areas that we do see in a lot of sort of startups and sole traders and the like is they don't sort of pay enough into their super in the early days and they leave it for a rainy day. And there really is sort of like an incentive for you under the laws as they stand at the moment to try to put that super in a little bit as you go rather than trying to wait for the last minute to do that. And so essentially, they're the things that I would really strongly suggest. Set up your separate bank account and put things in there. The second sort of really key area I'd suggest that you could really go, and it really goes hand in hand with Nat's discussion about, profit and loss and balance sheets, is really try to treat the business separate to yourself. A lot of the key errors that I see in a lot of small businesses is they mix everything together. Let's call it business with pleasure. And unfortunately, it's a really hard thing to track when you're trying to handle your personal expenses and you're treating like the business account as if it's your personal account. And typically we find most small business owners, when they get into that sort of habit, they tend to find that they'll spend more because the money's there. And as a result, they'll find that they don't have the cash in order to meet their business expenses. So hand in hand with that suggestion around having separate reports, and I like to show you what the businesses are doing, try to create the discipline of your bank accounts being purely for the business. And if you do have a sort of a discipline of being able to sort of pay yourself the money that you might have sort of used to been receiving when you're an employee somewhere, just make sure you take out that amount for yourself and sort of have it so as a point where you get used to living off that amount rather than treating any sort of excess in the business as something that you can access. So on that regard, the best thing you could really do then from a business owner, from a sort of a cash prediction point of view, is try to predict what your customers are going to pay you in, say, the next 4 weeks. The super users of our sort of systems would sort of tend to try to predict their cash flow for the next 2 months. But for a very simple business, all I could suggest is that you have a look at your month ahead and work out what is the cash that I'm likely to receive from my customers for the next 4 weeks. And what are my key expenses that I'm expecting to sort of pay? And again, this goes in hand with Carnio's suggestions around those startup costs and the like. Again, your two key sort of areas that you're going to have costs are, if you're a goods business, your stock. If you've got wages, you're going to have obviously, staff costs that are in there. And then the other normal key one that we see in businesses is the occupancy costs, if you're essentially not working from home or you don't have the ability to do that. So you would map in those three sort of core costs. When are they going to land? And I typically help clients set up a spreadsheet or something like that, which just takes the cash flow week to week. So you have a look at when is the cash going to land in and when do my expenses actually land, to try to make sure I've got sufficient cash to meet those expenses as they land. So essentially, they're my sort of core tips in relation to how to manage cash. There's a lot of sort of additional academic sort of things we could say is what goes into a cash flow and not. But it really is essentially the third leg of a three-legged chair. We look at profit and losses and try to work out whether we're making a profit. We look at our balance sheet to just sort of see what's our general health of the business, how much of the business do we own, how much debt do we have. But the cash flow is really the report that just shows, am I generating positive cash? Is my business creating more cash than what I'm spending? And that's the key report that I'd go and support Nat's comments around having a look at your cash flow just to make sure that your business is generating sufficient cash to meet its needs. So that's it for me. Caitlin, over to you.
Thank you so much, Ian. Okay, and now we have Tracy wrapping us up with all things tax obligations. Thanks.
Everybody. It's not a very sexy topic, but it's certainly a very important topic. And it's funny that the four of us have done this separately and we've all come up with very similar ideas. So we must be telling the truth. So the big one about tax is, as the guys have said before, is that you have to be ready because the taxes are going to have to be paid. You're going to have money in the bank to pay them. So you need 3 tips of how you're going to do this. And my first tip, I think, is more of a mantra as well. And I call it, dude, that's not your cash. Nice and easy to remember. So what you do, if you are paying employees their wages, that money that you take out of their wages in pay-as-you-go tax, dude, that's not your tax. Put it somewhere safe. It is not yours. If there's GST, if you're registered for GST and you're adding 10% to all of your sales, dude, that's not your cash. You got to look after it for the ATO. And same with the taxes at the end of the year. You should be putting money aside for that. And if you're paying super for employees, put aside for that. So now that we've got that mantra of, dude, that's not your cash, what do you do with it? You got to squirrel away the cash. Just like squirrels save their nuts for winter, you should be putting all of that lovely cash that's not yours in a separate place where you can't touch it. So as the guys have said before, open up a separate bank account and move all those bits and pieces as they happen to that separate account. When you run a pay run, if you're doing a pay run, move that cash immediately, whether it's weekly, fortnightly, monthly, move the superannuation, the pay-as-you-go tax to that separate bank account, and don't touch it till you need to pay the government or pay the super funds. With the GST, every week, every month, however, depending on how much money you're taking, and if you're a startup, it might be a bit slow, check out with Nat's very up-to-date accounts that she's doing her reports. Take the GST that you've collected, take off the GST that you've paid, find the difference, move that amount to that separate bank account and squirrel it away, just like the squirrels for winter. And the same with your taxes. If you are making a big profit by looking at your P&L, maybe squirrel away some of that as well. Decide on a percentage, speak to your accountant, see how much, but pick a percentage and move that to that separate bank account. All right, so we've got money to pay all our obligations. What do? We pay them the cash. So often I see so many small businesses and startups, things aren't going great. They stick their head in the sand. They don't do their tax obligations. They don't do their BAS returns because it's all just too hard. And that is the fastest way for a business to not do very well. The tax man is not going to forget that you owe him his tax. They're not going to forget that you owe that super. They're going to eventually come and get it from you. So you may as well, if you put that money aside, do your reports, lodge it with the ATO and do it on time. Because if you don't lodge them when the ATO want them, they're going to charge you fines and that's going to cost you money. So if you don't know how to do your BAS return, if you don't have help within your business, go and find someone to help you. So you could go to the Tax Practitioners Board and find a registered tax agent or a registered BAS agent to help you. Or you could even call the ATO and ask for help there. I've always, I call them quite a lot on different clients, and they're actually very helpful. So they are my 3 tips. The most important, of course, is that you're now a business owner. You're expected to do a lot of different things. Keep it simple, but remember, dude, that's not your cash. That's me.
Oh, wonderful. Thank you so much, Tracy. Okay. So that's our mentors' insights all done and dusted. So I'm welcoming questions from our attendees today. Is there anything that you'd like clarified or for any of our mentors to expand upon? Take advantage. I'm just waiting for these questions to come through. What we might do in the meantime is to also, I'm going to take the opportunity to thank the other mentors that participated in this series and the content creating aspect of this series. So we'll also thank Brian, Peter and Katrina. Whilst we're waiting for those questions, I also encourage you to go visit our Business Queensland website. We've got a plethora of information and support services available. I'll be sending you these slides after the session today, so you can certainly use the financial health check that we have available there, as well as the financial calculators. Okay, so furthermore, if you need any support in this space, you're more than welcome to register for a free mentoring session as well. These are 45-minute Zoom sessions with mentors like the mentors you've met today. And as I mentioned earlier, they'll provide you food for thought, insights and suggestions around those financial challenges that you are experiencing. So I'll just check if there's any questions come up. Anybody? No questions. There we go. Okay.
Well, there's a couple of questions in the
that just come up now. Okay, yeah. So well, Kanya, while you're there, one biggest mistake that you see in startups?
I think that we've covered a lot of that, and it would be that don't take enough time in preparing. I'd also say that when you are, a lot of people go into business because they're very, very good at what they had done as an employee. And so they go, you know what, I think I can do this on my own. And what they fail to understand, exactly what all 3 of us have said, or 4 of us, is that there's so many other little bits and pieces that go on, right? So you're also a marketing person. You're also a quasi accountant, so you've got to do a lot of things. So you just can't rock into business and just like if yesterday you're working as a carpenter for a building company and the next day I'm going to do it myself, well, you need to know where your suppliers are. You need to get a Bunnings account. You need to reconcile your accounts. You need to pay a GST. You need to find customers. What happens if the customer that you might have come across with you from your employer stops using you? How are you going to get your next one? So also a big one also I'll say as well is one thing I have talked to clients is that coming from an employee, or let's call it a full-time employee to an employer, you work for what you get paid for 52 weeks a year, but you generally work maybe 46, 47 weeks a year by the time you have holiday pay and days off from public events. When you're an employer, when you work for yourself, you only get paid for the time you work. So just remember, if you want to take the family on that 4-week holiday, you've got to earn it during the weeks that you want to work, or you'll be working 52 weeks of the year to make up the same. So there are a couple of big things that I find when clients come in to see me and go, you know what? It was so easy before. What are the certain things that I've done wrong? And it's those things. Calculate the times that you're off, the rain days, all that sort of stuff. If you're, say in the building or working outside, and holiday pay. And also, as I was saying, just remember, take time. You're going to do quotes. People don't pay you for your quotes. If you don't win your quote, you might spend a day a week not doing anything at all. So those type of things, I think, are big mistakes that that people in business don't allow for. So include that in your budget as well, in terms of like, hey, I think I'm going to do 10 sales a day. Well, maybe you won't. What's the stress test? What's the minimum I can do a day to make sure that I'm still going to be firing? So I think those things are hopefully answer a little bit of that question, along with everything else we've spoken about.
Thank you so much. Okay. Another question, Nat, digital systems, financial marketing, memberships, etc. Are there any websites or suggestions for price comparisons or recommended systems available?
Yeah, that's a loaded question. It really depends. So there's a lot of different systems for different things out there. And with the current software age and everything that's happening, there's basically multiple for each. So I think it depends on your industry initially. And I know that if you're using a bookkeeping system, there is some really great add-ons or applications that we say that back into those. So if you're using Xero, MyOb, or QuickBooks as a small business, all of those have additional applications for marketing and things like that. I have not seen a price comparison website anywhere. I'm not sure if anyone else on here has. It's research. So first pick the top 3 that you're really interested in, that do what you need it to do. So understand what you need it to do. Understand exactly what the outcomes are. And, you know, because I find myself even that when someone's giving you a sales pitch, you always believe it's the best product. And then you walk away and go, oh, it doesn't do everything I need it to do. So make sure you've got your list ready to ask the questions and find out. And then I just run a comparison myself and write down exactly what's included and how much each one is. And again, stress test, pressure test, can my business afford this? What outcomes am I going to get from it? What, you know, all of those things. You know, if you're doing marketing, you're expecting a return on investment. What does that look like? So if I'm going to spend $1,000 a month on this, what's it going to give my business and why? And I mean, that's part of it all as well, as automated processes. So if it's going to save you time and be efficient, then that's great too. If it's going to save you 5 hours of work and you only need to spend 1, then you've got 4 more hours to potentially do more work or create more revenue, then that's great too. So I'd say just back to basics, do your research, ask peers as well. So jump into any, you know, there's Facebook groups, there's small business groups, there's obviously like mentoring for growth. If you've got a specific question, the guys that come on there are very good in their industry and specific. So we say marketing, they're there. So use the resources from the business, government business websites as well. They're great.
Thanks. Now, Tracy, can you give any insight in regards to costing your time to give to the business? So what do you charge? So around pricing.
Do you mean what if I'm working in the business? Yeah, that's a hard one. So like we were talking about with Carnio before about people going from employee to being a business owner, you can't just pay you what you used to. because you're a startup. You need to work out what the business can afford. So if you definitely should be costing all of your time as to how long it takes, but maybe not pay all of that to yourself, if you know what I mean. So if you're working out the cost of a product, then you need to build in the time that you work on that product as part of the price for your sale. But depending on whether, excuse me, the business can afford that, then is how much you pay out. So they're like two separate things. So for me, to start with, I looked at what was the average in the industry that I was working in, and that's what I would suggest other clients and stuff to do. So look at what, if you were hiring somebody to do it, then maybe that's the cost that you should be charging to build into the price of the product. Does that make sense?
Yes, that does. Yeah. So you also perhaps accessing some benchmarking data whereby you can measure your.
Absolutely. Yeah. There's lots of benchmarks out there from government departments that will tell you what things are but then again, speak to peers too. I like that idea that Natalie said, speak to peers. That's a great answer for so many questions within small business when you start up. And usually when you're a small business, you have other friends or whatever that have small businesses as well. So definitely speaking to peers is a big yes.
Yeah, wonderful. Okay, well, that's all the questions that we've received today. If anybody's got any questions that they haven't put forward now but would like us to answer offline, please do so. Our email address is there up on the screen. And as recommended, please, if you would like any further insights, you're more than welcome to register to participate in the program. And as always, thank you to our wonderful mentors for your time today, particularly on a Monday morning. But that's probably it from us. So thank you, everybody, for attending, and have a wonderful Monday.